I might get over to Trend Spider. So, boom, 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 boom. I got to turn down my volume. Wow, it's 36 degrees here in Atlanta right now. That is horrific. Horrific. Let me turn on my do not disturb so nobody gets dinged in the ear. And we're going to do some scans. Let's see. We're going to open that up and we're going to say earnings. PLTR. Coke. Morning, Dawson. Morning, Zephin. Devon, A, B, and B. Upstart could be an interesting one. Roblox reports. Shop. Roku. DKNG, which will report a lot of their. And Cisco could be an interesting one, I think, this week. Marathon Oil. MRO, one of our energy plays. EQT Energy as well. Friday. Deere reports. Could be an interesting one since I hold CAT. Although they already had earnings. Redfin might be an interesting one considering I just saw a report. I don't know if you guys watch CNBC in the morning, but man, I just saw a report from a real estate reporter in Washington, D.C. And she was saying how open houses are crazy. SBLK, which is one of our shipping. Dash could be an interesting one with Uber. I am essentially going to go over just that. I still like Google under 100. I still like Amazon under 100. Cleveland Cliffs is almost under 20. I did find TARK. And I think it just started. I don't know when. Let's see when the daily. Monday, it looks like. Last year, TARK started. And it's interesting because this is the opposite of SARK. And I've been looking at this one as, so SARK obviously is going to be going up because the ARKs have been coming down. This one is a triple levered kind of like TQQQ and SQQQQ. I don't think CPI. Does CPI make me not want to buy? No. Where's Google? Google's at 95. And I'm just going to go off on memory. I don't have any notes on this one, but there was a great all-in podcast about Google and AI. And again, the podcast is all in. It's fantastic. I'm going to record this because I want to go hiking today. There are some crazy ones, by the way. The one that I saw, Chicken Soup, CSELL. Let's get over here. CSELL. Chicken Soup for the, is it CSSEL? God. Chicken Soup for the Soul is the company. We'll go for this. This is meme 101. And we'll go to over here. Oh, CSSEL. Is it even in here? No. We'll go here and we'll look at. So, I mean, this is just. They own a hotel, operates a streaming video on demand company in the United States. This is the company, I believe, that, remember movies.com, I think it was, or something. CSSEL is the one that seems to be moving. Is it CSSE? Let's see. Yeah, there we go. That's it. Why do they have CSSEL? Change percentage, 78%. Chicken Soup for the Soul. Entertainment. This is Meme Stock 101. If you guys were around trading during the GameStop stuff, this thing was just crazy. This is where it was. This is one of those stocks. This is, where's the date on this? August 10th, 2022, last year. Let's go to monthly because you'll see. This is June 2021. Look at this one. This is July 2020, and you just start going up and up and up, and then you have this enormous crash. And, oh, I'm not even showing you this one. I was on CSSE. There's something to do with CSSE. CSSEL. I don't know what CSSEL is. It's got something to do with warrants or something like that. It's up 62%. I mean, it's up 2% in pre-market. Let's see if this is in here. Yeah, it's a 6 cents. I mean, it's essentially doubled. But I don't know what CSS. Let me see. See, if you click on it here in investing.com. Doesn't tell me what, but it's got something to do. It's like warrants or something like that. But it's up. It's up at 7 cents right now. 78%. So if you want a momentum trader, here we'll go to let's go to a 5-minute chart. And we will do extended hours. Boom, 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 boom. I'm going to take the strategy tester off. This is this morning. I don't even think it's open. I wonder what, I mean, it's basically when you go down here, let me see. Acquires John Hamm, Screen Media acquires John Hamm and Tina Fey led thriller Maggie Moore. That's from February 9th. That's not. February 13th. See, it's CSSEL that's moving. So it's not the chicken soup for the soul entertainment. It's like the warrants or something, CSSEL, that's moving. Pre-market mover. And I have it listed. It's funny. Look. Well, you can't see this. But I have it identified as a favorite because during GameStop I was trading stuff like this. But yeah, pre-market is, I mean, I love this site just to see, okay, what's moving. I mean, Bed Bath & Beyond up 2%. You can see VLON Pharmaceuticals up 50%, Clean up, EBET up 25%, Sorrento Therapeutics, they're down. I mean, I think that one's been beaten. Tesla's taking a move down. Tesla was positive. But okay, let's move into Market Scanner. Let's scan for some stocks. It's an interesting one to look at. I will put it to you that way. And I was looking for, okay, when Dawson said, hey, am I looking to buy anything? If I get the need to trade, that's typically where I go is, hey, let's look at some momentum trading. Meta's up 2%. If you haven't seen Meta, nothing in the core portfolio scanned up. If you haven't seen, Meta is not giving their department heads budget, which is interesting because they're holding off on budget, which there's some internal reasons, and the internal reasons that they're saying is there's more layoffs coming, which, in a stock like Meta, when you have internal layoffs, stock's going to go up. It's going to boom. And Microsoft's up. Exxon, once it hits those 52-week highs, man, that thing just doesn't move. Let's look at our not owned. We're going to take a look at, mostly what I'm going to do is take a look at some earnings. What do I have in my notes? Let me see. I've got David Yoakum tweet, CAMT, which is interesting. ARK Holdings. I got David Yoakum tweet, earnings, and then any of these scans that come up, but the scans ain't coming up. Let's go to Dow 30. And my weekly stock pick, which is Boeing. And if you guys aren't doing that, man, did anybody bet on the Chiefs like I told them to? I know last week I was like, hey, just bet on the Chiefs. KHC crossed up. Is that possible? It had another cross up? It did. Pretty strong cross up going into earnings. Let's see. We'll put this down. KHC. And then XEL. Excel Energy. They've already had their earnings. Let's look at the S&P. And then I'm going to start the podcast. Altria Group. This is an interesting one. Somebody said they bought Mo right before earnings. And I know we had a cross up back here. Here, I'll show you the algorithm. I know we had a cross up And what's interesting about this one, 44.65 and you're at 47.26 with a gap. Interesting that you get a secondary cross up here. So, I mean, just from a chart standpoint. Now, your boy ain't investing in this one because I don't vape shirtless. Where's Mike? I got to get Mike on there because Mike's a vapor, and Mike is the guy who always yells at me. Take off your shirt, man. Let's vape together. Market scanner, okay. We did the NASDAQ. That was the S&P, I think. Let's see. Yeah, that's the S&P. Okay, let's look at the energy sector. I'm slowly moving away from the energy sector as, oh my God, it's going to move this year. It's got to, but man, it's just geopolitically, it's just getting knocked down. Matador Resources, don't like it. NEX, no. WTI, this is a stock. This isn't the WTI, the oil. This is an oil producer. It's just a symbol. Bruges. That's an interesting one. BATL, Battalion Oil. CIVI, Civitas, APA. You know what I want to look at? I want to look at REI while we're at it. Let's see where REI is, how that investment looked out. SDs, Earthstone. This one always comes up. Boy, that's an ascending triangle, and it's broken out above it. Boy, that's a nice move right before earnings. Oof. That's a strong stock right there. PARR. Let me look at that one. $33 price target. And it's trading at 28. And that's a new price target. Year to date up 21%. This is a energy and infrastructure business, operates 3 segments: refining, retail, and logistics. Their market cap is $1.62 billion, so it's mid cap. Not a huge float. Target price, average target price is 29. And they're at 28. 28.25. And they're heading into earnings. I'm going to bring this one up. This is an interesting one. That one interests me just from the fundamental standpoint. This one interests me from the chart standpoint. And earnings coming up. Look at this. They lost 19 cents and then they made 19 cents. CLMT. Let's look at CLNN on FinViz. By the way, if you're here, hit the thumbs up button. I forgot to do it myself. They're not making money. They're up 5%. August was the last. Monkey said 23. Market slate of specialty brands, products to various consumer-facing and industrial markets. Wait, is this CLMT? Why are they in the energy sector? Waxes, customized lubricating oils. Company's Montana renewable segment focuses on processing renewable feedstocks into renewable hydrogen. So they take the gas. This is interesting. Everybody's buying at about 15, and it's trading at about 17. Those are from last year. They're fairly big buys considering this is a company with 1.36 mid cap. They only have floated 62 million. So I wouldn't put, because these are directors, accounting officers, executive chairman, EVP, those are decent buys in the company. It's almost like the CEO said, hey, I want my boys buying. As recent as Chief Accounting Officer bought on December 2nd at 15. A lot of people were buying at 17. And let's look at it daily. That was in December. So you can see the dip down below the 200-day there. Now it's above the 200-day. Hey, VRO. What up? That's an interesting one. I'm going to bring this one up too. CLMT. Let's look at TP. Oh, man, I got a lot of these. Pump. What the hell is Pump? Pro Petro. MGY. This is Magnolia, yeah. Their ex-dividend date just passed. You got these gaps down here. Don't like it. Even though their earnings are coming up. I mean, all of these guys on earnings is energy. Why is this not going to, pop? KLXE is down 4% in the pre-market. Their earnings are coming up later in March. Bong. Okay, I'm going to start recording the podcast. Pre-market movers. What do I have open? I have Active Trader Pro here. Most actives. Let's go to Active Trader Pro and let's look at GSN, GNS. I always get that mixed up. Closed at 628. It's at 614. FFIE is another one that I want to look up. Oh, this one took a leg down. Boy, last week it really came down. Let's look at the 10-day. Yeah. It's really just been on a slide. Bed Bath & Beyond. I want to look at Carvana too. Yeah. That short squeeze, I mean, if this doesn't say short squeeze is over, short squeeze is over. What's Carvana's symbol? Again, why do I do this all the time? CVNA. My dyslexia. I've never been, by the way, told that I have dyslexia, but I always do that with numbers and symbols and just mess them up. This one might still be in play. Oh, I have to put in DRN. It's come right to about. Why is this doing this? CVNA. You'd be in at 474 and still in, although it's got no confirmation there. And their earnings are coming up February 23rd. Boy, that's an interesting one. You got a gap up here at 23 that if they report, hey, we're not going insolvent, and used car prices have come up and we've been able to sell some of our inventory, that could be in play. Then you've got, hey, we're still managing our inventory as best as we can. And then you got the gap down here, 50% down. Boy, that's an earnings play right around the 200-day. I'm going to bring this up, because that's an interesting one. I like it. I like it a lot. Okay. Boom, 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 boom. That's an interesting one. Meta's up 2%. I'm looking at the core portfolio here. Microsoft's up 1%. Okay. Let's record the podcast. Boom, 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 boom. Let me just look at SPY. That's the one I really want to look at. SPY and Qs. SPY's kind of turning over. This doesn't provide me a whole lot of, oh my God, we're going back up kind of confirmation. Every time you got above that 200-day, you just come back to the 200-day. Now, the 200-day has turned positive on this one. If you go, you know what? We're going to go and we're going to do two charts. And we're going to do top and bottom. And we're going to look at a daily. I see the button hook. And let me see. Can you guys see it? Let me move over here. Okay. Now you can. So, run. Let's see what happens. Up here's the button hook of SPY. And this is the 4 hour. I probably have to. Hold on. Move this a little bit like that. There we go. It's probably a little bit better. Here's SPY. And up here above my head, you can see the button hook. And then here, hold on, I gotta go. We'll move me over here. You can see the button hook of SPY right there. And this is a daily of SPY. You can see kind of a button hook starting. The 4 hour chart, you see it faster than the daily. Maybe I'll just start with this. You know what? Let's start with this. It's 8:42. Let's start with this. Good morning. It is Monday, February 13th. Not time to kiss your kids yet. Tomorrow is Valentine's Day, and my two bitches will be taken care of. Those are my two dogs for anybody that you guys, any of you new folks. My name is Gary, Daily Stock Pick Podcast. This is TrendSpider. If you are not subscribed to TrendSpider, but if you listen to me, this is part of my system that I try and teach on this podcast. I don't charge you a damn thing. There is a subscription fee to TrendSpider, but you can absolutely use whatever charting program you want. If you want access to my algorithm, sign up for TrendSpider. I'll give it to you as part of your subscription. There's a link down below. DSP25 gets you 25% off. So you can use that. Just email me, text me, whatever. Get in contact with me with any of the socials. But I'm taking a look at SPY. And up top, you'll see all of these entry and exits, greens, reds. That's my algorithm. And that's part of SPY. And you can see I always talk about button hooks for all the longtime listeners. Well, just above my head, if you're on YouTube, is the button hook on the 4-hour up top. I'm looking at two charts. I'm looking at the 4-hour, which is what my algorithm is based on. And then I'm looking at on the daily, just below it. The 4-hour moves a little bit quicker than the daily, so you can see the button hook happening. What we've seen over time is that every time the SPY gets above the 200-day, it's pulled back. What we haven't seen in quite a while is that the 200-day has started to turn positive. So the question is, are we getting faked out? Are we moving into a bull market? The fear is that Jim Cramer said we are in a bull market. He also said that the Eagles were clear-cut winners last night. He also said that the Phillies were clear-cut winners. He went to both the Phillies and the Eagles World Series and Super Bowl, and both teams lost. So the curse of Jim Cramer continues. And SPY, I have a feeling that we're in a little bit of a downward trend, but it's not clear. If you were to look at my algorithm, and I'll go back to a single chart, just one chart. If you were to look at my algorithm, and I do need to just move my head. I'm sorry to do this, but just move my head a little bit on this. I'll move myself up. But you can clearly see on the algorithm, there's that button hook. And on the MACD, you're moving down. On the RSI, you're moving down. You're in no man's land in the RSI. I mean, it's at 52. It's directly in the middle. So it's unclear where we're going. Completely unclear. Now, if I were to test my algorithm and you were to trust it, you'd still be in. The algorithm doesn't have you out of this yet because there's some moving averages in the algorithm that you need to get out. But at 380, if you bought and you're at 408, take some profits. It's a pretty good, almost 10% move. You're damn near 10%. You had your 10%, and that's in SPY. Now, if we go to QQQ and just look at QQQ, remember when we're trading TQQQ and SQQQ, we want to look at QQQ first because those triple levered ETFs will absolutely be bigger moves, but you can see we're down below the 9-day. Qs are kind of following SPY. The MACD is high. It's moving down. As far as futures go, it looks like the market will start up. Last week, on Monday and Tuesday, I believe, we started down and then we ended up. It wasn't big moves, but today we might start up and wind up down. On the Qs, my algorithm makes you 0.57% versus it loses you 0.57% over 1,000 candles. And those 1,000 candles, because it's a 4-hour time frame, those 1,000 candles represent about 2 years, 500 trading days. 0.57% is what you lose in my algorithm. You lose 10% in the just buying and holding over the same 1,000 candles. So the algorithm's pretty good in having you hang out in the middle. Now, in me, I'm probably in this chart, I'm probably going into SQQQ. Just because I do think that there's a downward trend at this point. If you need to trade tomorrow's CPI data, you don't need to trade. Be patient. Understand that the RSI is in no man's land. It's at 52. Same with the SPY. There is no clear direction that this market is going to. So I wanted to take a look at some of the earnings this week. Tomorrow, we have Palantir. And this one could move. The implied volatility is that it could move 5 or 6%. Right now, you're seeing this one is down. It had you in at 645. The 9 days moving down and going to cross the 21-day. The 50-day, ironically, was about to move and do a golden cross. Now, if I look at Palantir in the pre-market on my Active Trader Pro, which is Fidelity's version of their charting software, you're trading up. You closed at 751 on Friday. You're trading up at 755. So it's still moving slightly up. Your earnings are tomorrow. The earnings should be good. I mean, Palantir's guy, their CEO was all over Davos. So it would be an interesting one. This is not in our core portfolio, and I do believe that earnings should provide a pretty good either pop or loss on this one. I see a gap down here. It's been filled, this gap from November. It's been filled. I just don't see anything that tells me, oh my God, this one's absolutely going to move up, or oh my God, this one's absolutely going to go down. This just doesn't tell me anything. But Palantir is tomorrow, tonight after the bell. What we're going to find out tomorrow before the bell is one of our core portfolio holdings, Coke. I have said this many times, under 60, buy it. Over 60, you can sell it. This is not one that I tend to trade. It's got a great dividend to it. If we go over here to FinViz, you can see KO, 2.95% dividend. It's trading a little bit high with its PE at 26. These guys just print money. They're down 6% this year. But if I go and I just look at this one, I'll move this one to a weekly chart. You can see it just kind of hangs out on that 50-day. When it goes under that 50-day, you want to buy it. It's going to move up on that 50-day. The 200-day provides the ultimate support of this one. When you get to that 200-day, absolutely try and buy this one. Again, they just kind of print money. I would say under 60, it's an absolute buy. When you look at Pepsi, which is another core portfolio holding, and the reason it's core portfolio, your boy loves cola. I absolutely love cola. So I own both. This one, I say under 170 is the buy. Over 170 is the sell. Simple as that. I mean, just this one has a gap here between 164 and 166. They announced earnings. They had great earnings, $1.67 per share. You can see they've moved up after earnings. Coke, probably going to be very similar, I would think. I mean, in this environment that we're in, inflation could come and it could, cut into their margins. But these guys are just masters at that. And they're just going to print money. So Coke comes up. Another one that comes up after the bell is one of our core portfolio, Devon. And Devon, oil is down today. Devon has a cross up at 63.23. A cross up, 63.23. Right now it's trading at 62.99, so it's down. Their earnings are coming up. Everybody's, energy sector has announced crazy earnings, crazy good earnings. Now, here's what you have to know about the algorithm. I say anything below 60 on this, you buy it. Anything above 60, you can absolutely sell it. I personally hold this one for the dividend. It's got a great dividend. I think it's still the highest paying dividend stock in the S&P, 8.14%. So they could up the dividend. They could buy back more shares. They could do a lot. Just what Chevron and Exxon did. Same kind of thing. You're under the 200-day. The 200 days at 65. The algorithm says buy in. Now, here's what you have to know about the algorithm. The algorithm actually loses you 12% on this, whereas just buying over 1,000 candles, you would have made 206%. This is one energy sector. That's why I buy and hold it. It is expensive. The PE is up there at 6. It's not crazy expensive, but 6 for an energy company, it is up there. It does, I believe they do have They do have some, oil and natural gas. They do have some exposure to natural gas. You can see there's nobody buying this from an insider standpoint, but they're selling at 70. I mean, these guys are selling in the high, you go back here to about March or May. The last sale was at November, where the EVP and general counsel sold $400,000 worth. An EVP and general counsel of an S&P 500 company selling $400,000, he's paying for his pool. That's it. Airbnb is coming up tomorrow. I just scheduled a vacation in North Carolina for March. I used Airbnb. Airbnb is getting some bad press around the Super Bowl because there are some basically house owners that said their houses stayed empty because people wanted to stay in hotels. Well, that's because you're charging me a $300 cleaning fee, and I got to rake your yard, or I got to take the trash out, or I got to strip the bed of the linens, and you're charging me a $300 cleaning fee? It's not the good owners that are getting bad press. It's the bad owners that are getting bad press. So this might hurt this stock. Again, kiss your lovers. It's on Valentine's Day. Another one that comes up is Upstart. And Upstart, Airbnb, by the way, I in my mind, it's a long buy and hold. They are not making money. We can go over here to FinViz. Well, they are making money. Just the PE is 45 on a hotel. It's crazy that your PE is 45. They're up 27% year to date. This is one that got beaten down over the last year. You're down 35% over 1 year. Your 52-week range is between 81 and 191. You're trading at 108. So you're right in the middle range. So Airbnb is one that could be a kind of winner. Now, Upstart, you got out. The algorithm gets you out of this one with a 30% gain. And the algorithm waited a while to get you out. But it's a 30% gain heading into earnings. I wouldn't expect these guys to blow away earnings. This is a company that provides loan services, and their algorithm supposedly during the COVID time was amazing at providing loans for people. Their algorithm kind of screwed up. So I wouldn't put money into this one. I think it's a kind of a losing one. And I think with us going into rising interest rates, with people kind of look at the forward PE, 307. Their earnings are going to be hurt. This isn't the company that's going to all of a sudden come out and say, hey, we made money. They're up 23% this year, but they're down 85%. And that forward PE of 307 is crazy. And if they have more bad loans, you're going to get hurt in this one. One that is coming up that I do like is Roblox. The problem is it has run. The algorithm just got you out with a 31% gain. 31% gain from this $26 on December 29th. Their earnings are coming up. They're right around the 200-day. That RSI is at 40, kind of in no man's land, but the MACD is moving down. I don't know that I'd necessarily play this one. If we get under 30, I think if we get under 30 on this one at some point before tomorrow, if today for some reason trades under 30, right now it's trading up. It's at 34.85. It closed at 34.82. If we get under 30, I might buy some, just because I do think, these guys, they do it right. They've got the metaverse, and Meta said they're getting out of the metaverse. Well, Roblox actually has creators making money. Shopify is another one. The algorithm's going to probably get you out, but they're coming up on Wednesday, and Shopify is one that is super expensive. This is what was called the small business Amazon. Their forward PE is 847. They are down 47% over the last year. Over year to date, 39% up. They are 104% above their 52-week low at 23. Their 52-week high is 93, which they're 48% down from. I wouldn't expect this one to pop. Their last earnings, they did pop because they made surprising numbers. One of the things you're going to need to look at is they had a price increase. Is there any kind of retention around the price increase? If these guys kept the same amount of subs, and you can see that 200 days going positive, you're going to see a pop in this one. So Shopify, it's one that I personally own. I think I own it at about 70. It might be a little bit lower, but I do like Shopify. Another ARK one that is coming up is Roku. I am watching CNBC on my big screen using a Roku stick. I freaking hate the Roku interface. Can't stand it. It is kind of like the Android of phones. I like the Apple TV interface, nice and easy. I have Apple TVs throughout my house, but understand, Apple TVs are expensive as F. I mean, they're $100 versus a Roku, which is like, $20. Amazon Stick, which is like $20, but they never work. Those things never work. Roku is not making money. Roku is a Kathy Wood ARK favorite. I just don't understand it, but I do know she has her eye on the prize. I mean, they're up 34% year to date. Over 1 year, they're down 66%. These guys, the monkeys hate them. They moved them down. Price target 50, price target 30. The average price target is 57.28. They're at 54. So they're at the monkey's price target. That could be dangerous for this stock. That button hook right there, the algorithm gets you out with a 40% gain right before the earnings. I'd rather put my money somewhere else. Super Bowl was yesterday. DraftKings, their earnings are coming up. I sold this one for a loss, so I can get back in if I want. The algorithm probably will get you out in the next couple of days, maybe even before earnings, but you're in at $11. You're trading at $15. You almost doubled your money up here at about $18. If you have purchased DraftKings and you're sitting at a double gain, I would sell. The cost of acquisition for every new subscriber is what's killing this stock. It's super expensive. One that it is making money and could continue to make money and is reporting on Wednesday as well is Cisco. This is an interesting one because I always use this as an example, because if we go back and we look at a monthly and we think about the 2000 dot bomb, you were trading at 73 and you immediately went down. Well, you went back up to 32 in 2007, and then the housing crisis brought you back down to the teens. These are not splits. These are not adjusted. This is actual just price of Cisco. And you can look at this. You're at 47. If you bought back here in 2000, 23 years ago, you're still in the dark. You're still losing money. So it's an interesting one because they do pay a good dividend of 3.22%. It's just boring. I mean, this is like IBM. Year to date, they're even 0.8%. You're down 16% over 1 year. Your 52-week high is 57. Your average price target is 54. You're trading at 47. The last move was I gotta sneeze. Oh, I gotta sneeze. Oh, why does this happen? Oh, let me go blow my nose. Oh, I gotta sneeze. I hate this. Oh, I hate that. Hey, Emmett. Oh, I hate that. Okay, where was I? Cisco. Okay, sorry. I had to sneeze, man. God, I hate when that happens. But yeah, Cisco, you can read. Insider Monkey has 12 most undervalued Dow stocks to buy. You can read about them. I don't see a buy here from anybody insider in 2022. Just kind of my thing on this one. It's just a boring stock in my mind. So I don't know that I'd necessarily get into it. One of our energy plays, Marathon Oil, MRO is the symbol. This one, the algorithm just got you in at 27.53. You're trading in pre-market at about that price, 27.53. It's hovering around this 200-day. The oil companies are just, printing money. This one probably prints money and goes back over 30. Just my take on it. Oil is down today. This one, the algorithm doesn't do you great, so I don't necessarily listen to it, but the algorithm makes you 8% over 1,000 candles. If you just bought and held this one, it's 188%. There is no way any algorithm is going to do better than just buy and hold on an oil stock like this over the last year. It's just gone crazy. A natural gas stock, EQT. And EQT, we had a couple of buys. Last week, it triggered at $30.73, EQT. Their earnings are coming up on Wednesday as well. Natural gas has just gotten killed. Are we at the bottom? The RSI is at 50. I mean, it's in no man's land. It's kind of been just, going down. Natural gas, they may come back and they may say, hey, we can produce more and we're going to produce more and we expect the price to go up. You got a gap up here at 37. You're trading in pre-market at 31.32, down 1%. So it's EQT. Deere is coming up with earnings. This one's interesting because I personally own CAT. This one had a cross up here at 410. You're trading at 418 in pre-market. They could come back and say, hey, we've got, we're getting ready for summer. We've just sold a bunch of equipment. We're getting ready to open up China. They're going to buy some equipment, blah, blah, blah. Could come back and be a good one. StarBuck, SBLK is one that I've traded in the past, and it's been a good one. They crossed up January 9th at $20.20. You're at $22.91 was the close. You're down $22.75. Their earnings are coming up. The MACD's kind of high. The RSI's high at 57. There's a gap up here between 24.18 and 25, which could come back. Again, if they have some crazy good earnings, you could see that gap covered. The 200-day is moving positive. The golden cross happened on January 17th. The 50-day is moving. You're slightly above your 21-day. You're right on your 9-day. So could be an interesting one. Dash has earnings. DoorDash has earnings this week as well, with Uber coming out with crazy good earnings. And Lyft just tanking it. Lyft tanking it. I mean, I'll look at Lyft later this week if you want me to, because any reaction in the market is an overreaction. I think Tuesday you could start buying Lyft if you wanted to, if you think that they're going to come back. This one, Dash, it's riddled with gaps. It is not a great trading stock. Now, the algorithm loses you 48%, but buying and holding this stock loses you 72%. They're not making money. But I personally, while I'm on the road, I do like DoorDash, and I use it a lot. So, David Yoakum, who left TrendSpider, who I did a video with, it was amicable. He's going to continue his studies. He had one from a small tech, and here's the tweet that he put out. In the interest of me taking multiple financial statement classes at university, I decided to filter through some small caps with great growth potential. He found CMAT, which is Camtech, which just gave a 200-day SMA signal, which has outperformed the buy and hold over 23 years by 14,000%. My algorithm has you out with a 23% gain. Now, my algorithm doesn't perform very well. I would say you could probably, David's charting is simple. He typically uses an 8-day, the 200-day SMA signal that he has is The stock just crossed the 200-day. So he may look at a daily on this one. You can look at it. It just crossed the 200-day, just back here. It's using the 200-day as its support. They have earnings coming out, looks like Wednesday, February 16th. Wednesday, February 16th, in the pre-market. This one could be interesting. I thought I'd bring it up because I do like David's picks. He's been very, very good and very solid. Another one that I want to bring up is DRN. This is the real estate bull. Now, I know that this one just got you out with a 20% gain on DRN. But here's what I heard this morning. There was a real estate reporter on CNBC who basically said this weekend, crazy real estate market in the weekend over Washington, D.C. Oh, my God, I got to sneeze. Why do I have to sneeze? John, I've looked at Albemarle. I think that's the lithium play. I've looked at it recently, yeah. I'll look at it for you. I'll put it on there. Oh, my God, why is this happening? I'm glad I don't have an 11 o'clock vet appointment for the dog. She's feeling better, so. Okay. Sorry, I had to sneeze again. But, yeah, so the real estate market seems to be hitting another peak. This particular agent was saying that they can't keep houses in the market in Washington, D.C. anymore. So as long as that's going on, DRN might be your play. Again, my algorithm has you out of this one, but DRN, if the real estate market's going to continue to go up, this gap here at 15 might be something you want to get into. Now, the 9-day is crossing the 21-day. You did have this golden cross back here January 27th, and you're just getting out of a 20% move. In pre-market, you're up 0.41 at $12.30. Most likely, you're going to have another cross up here. As long as we're moving up. So I wanted to bring that one up as well. Carvana, they have earnings coming up, and I was looking at this chart as something that, hey, let's look at it to see, is there an opportunity for a short, blah, blah, blah. Their earnings are coming up February 23rd. Now, I don't know that I'd necessarily hold on to this one. The used car market is getting a boost. They have been selling off their inventory. Their problem is debt. They are way, way, way down. The earnings will be anticipated. But if you wanted to look at this one, I mean, again, there's a gap here at 24, and then there's a gap here at 5. If they come out with their earnings and they say, yeah, we're fine, and we've moved our inventory and cash is pretty solid, blah, 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 you could see the move back up here to 24. If they come out and say, yeah, we're just having problems, we've sold our inventory, but nobody's really buying. Remember, this is a company that just the cost of actually delivering a used car cut into their margins, and they couldn't make it. And so now that you have the used car market kind of coming down, maybe they've leveled off. But I don't know what the fair price is. I just think that probably the short is off the table. There's no more squeeze on this one. My weekly stock pick. My weekly stock pick is Boeing. If you're not subscribed to Weekly Stock, and just go and look him up on Twitter. Here, let's go and look him up on Twitter. He's got a newsletter where he puts out a summary on Saturday, and he basically picks a stock on Monday. His performance is unbelievable. Go to his Twitter or his Instagram, My Weekly Stock, and you can look at his Substack, and you can see all of his performance. I mean, he really is. He made money last year. The S&P was down. This guy made a positive gain. So if you're not in this one, I'm in it. Last week, his pick was Goldman Sachs. You made money. You didn't make a lot, but you made money. Let's see. What did he make? My weekly pick for S&P, 34%. I'm trying to see what he made last week. He's got an algorithm. Just, get into Boeing, sign up for his Substack. I mean, again, you get it in your inbox. it's one of my must reads. I like it. So this week it's Boeing. And if you look at Boeing, you're in this ascending triangle. Now, as long as he says to buy it, I'm buying. I'm in. You ain't going down to, the 200-day at 172 this week, unless we get into a war with China with all these UFOs coming over. But Boeing is this thing. I did want to bring up, because ARK moved so much this year, TRK was the play. And this is a 2 times the ARKK. If you are interested in Cathie Woods for a 5-year timeline, do not buy TRK. You buy ARKK, because you're actually buying an ETF that has actual stock value. TRK, it's levered, so it trades on options, it trades on futures, and it is designed to be double the ARKK, but you don't want to hold this one long term. This is one that you trade. And this one, December 30th, $39.73. Today you're at 63. You got all the way up to 83. So you doubled your money here. While ARK was up 50%, this was up 100%. If you want to do the other one, and this is why I'm bringing it up, SRK had a cross up here at 39 on February 7th, just last week. We brought this one up. It's now at 42. It's a good move, and it's still got solid momentum. You did have this death cross here on January 12th, which brought you down from 60s down to 40. This was a huge one. You've got this gap in SARK up here at 58 to 68. Now, if you think we're going up in the market, do not buy SARK, but you can absolutely trade it. I wanted to look at one that we looked at for a while. REI, this is an energy company that has debt problems. It's got gaps all over the place. You do have this one big gap up here at 338. You don't have any kind of catalysts that are coming up, but it's interesting because it crossed up again today, $2.32. Interesting. It's trading at $2.30 pre-market. We got out with it. It's just kind of been in no man's land, but it's below this 200-day. Now, mind you, the 200-day is in a negative trend. So I wanted to bring it up just because I haven't in a while. It was John wanted me to look at Albemarle, Albemarle. I never know how to say this. This is a lithium play, ALB. Alan, Larry, Bravo. I think that's what it is. This one had a $214 buy-in on December 30th. Today, our algorithm gets you out at a 23% gain. Our algorithm doesn't time the bottom of the market. It doesn't time the top of the market. You do have this gap up here between 301 and 315 that is still untouched. You are using this 200-day as a support level. I mean, it is clear as day that 200-day level is a support. It's not resistance, it's support. So once you break through this, it does provide some resistance, because when we were at 214, that 200-day was going to be the resistance at 266. It went all the way up to about almost 300, 290, somewhere in that. But that MACD is moving down. You've got your earnings coming up on February 15th. This one could be, again, the earnings could blow it away. Look at that, $7.50 from $3.45. If you blow away earnings and you believe in this one, I'd absolutely get in here at probably, again, you're at the 200-day at 260. You got everything moving forward. It's almost a golden cross. A golden cross right before earnings. Boy, if they just don't surprise, you might get a good surprise in that one. But if we go over here, let's look at some of their fundamentals. The PE is 20, so it's a little bit expensive. Forward PE is 9.44. Their dividend is 0.59. Year to date, they're up 23%. Over 1 year, they're up 13%. This is a company that develops, manufactures, engineers specialty chemicals. It works in 3 segments: lithium, bromine, and catalysts. So You can look at this one now. The sale, the last insider, it was a sale, 378. This is an EVP. Don't even worry about that one. The only one that I would worry about is November 11th. This guy, the EVP or girl, Karen, sold almost $3 million worth. Looks like quite a lot at between last year, 268 and 322. So she sold quite a lot during that time, but maybe she was, buying a house. Who knows? But I do like this stock. I do think it's a good one. I haven't added it to our must own, but Stephanie Link, I know, is a fan, so I'm a fan of hers. I like the stock. Let's go into the I like a stock thing. Kraft Heinz. These are our scans. Kraft Heinz crossed up right before earnings, 39.64. In my mind, I think you're using 42 as your resistance level. This is one that is right around the 200-day. It just sets up nicely as long as they don't disappoint. You do have gaps down here, but they're below the 200-day. The 50-day is turning negative, but that 200-day is still positive. If we go to a daily on this one, you can see that 200-day is just turning a little negative. The 50-day is still positive. 9 and 21 have crossed down. I believe that this RSI is down low enough. I think it's good. I like this one. Another one, Excel Energy. This one doesn't have a huge catalyst. Their earnings are already past 68.49. The algorithm makes you 36% versus just buy and hold makes you 12%. So I like this one just because the algorithm has done well on it. I think this one at $60 down here with that run all the way from October to December 20th, it's just kind of been hanging out here. The 50 and the 200 are just moving in the same direction. There's just not a whole hell of a lot of catalyst on this one. I think it's okay. Do your research. Understand that this wouldn't be my favorite one, but it does have a cross up, and 68.49 is the thing. Altria, which is the vaping stuff, and hopefully, Mike, you're shirtless and vaping. But MO is the symbol. This is a secondary cross up. Their earnings are already past. 44.65 was the original one. You're at 47. You still have confirmation above that 9-day. This is just another move. The RSI is a little high at 62, but it came up. Two energy plays that I thought were interesting is Par Pacific, PARR. This has an ascending triangle, a wedge. It just broke out above it. They do have earnings coming up on February 22nd. The MACD is a little high, but I do like the move in this one because while it's extending out over the 200-day, that 50 days positive, the 21-day, trade the trend. PARR is the symbol. I don't know much about it other than technically it crossed up. Its PE is 5. It doesn't have a dividend. It's up 21%. Performance over 1 year, it's up 93. January 20th, Piper Sandler said, hey, this could be a $33. It's trading at 28 right now. And their earnings are coming up. So you can see now all of these people are selling at 23. And it was in November. The values, these guys are selling at 17. And the value is $1 million. This is a trust company that's probably trying to get out of it. They're a 10% owner. They're probably just reducing because it's been up so much. I mean, again, over 1 year, you've doubled your money. But it does have that ascending triangle. It broke out above it. Bullish signal. So CLMT is also one. This one is Calumet. I don't know anything about this company. But this one, again, it got a cross up here. It's a secondary cross up. The original was at 1706. Right now, you're trading at 1775, right where you closed at. It's got this ascending triangle, the wedge. It's above it. The 50-day just had a golden cross up here at $16. CLMT, if we look at this one from a perspective, it's up. Performance over 1 year is 14%. Year to date, it's up 5%. They're not making money. The forward PE is 13, expensive. August, Goldman upgraded this with a $23 price target. It's trading at 17. You can see some of the what I like about this one in particular is that these guys are buying at 17. All of these people are buying at 17. Not huge buys, but they're buying at 17. So the insiders in the company believe it at 17. I think 17 is probably a pretty good price for you to buy if the insider's buying it. Do your research. You do have this golden cross on January 30th, so the month of February. Oil's just one of these things that you can invest in. The algorithm makes you 451% on this one over a 2-year period. It's been crazy. The just buying and holding makes you 337%. So it's been really, really good. I think that's it. I'm going to keep this one short. To address the Tom situation, I will just quote Cartman, suck my balls. And that's all I will say about this one. He will not get an apology. But if you have any questions, hit me up. The socials are down below in the link tree. You can join our private Facebook group. I post charts in there. I post all my anti-Kramer stuff in there. And the Facebook group is a community where you can post stocks if you like. You can post what you think. I'll reply to it. The community will reply to it. It's just a great group. If you made it this far, hit the 5 stars on the review. If you'd like, go over to the YouTube channel because I am showing it live on YouTube, all the charts that I'm looking at. And if you have any other questions, hit me up. Okay, take care. Bye. I wanted to keep it under 40 minutes, and I hit 40 minutes and 6 seconds. Okay. Export. Do you guys have any questions? Palantir's an interesting one, by the way, with their earnings coming out after the bell. The options market, by the way, I read this, is implying a 5% move. Of Palantir. Morning, Justin. Oh, boy. Brian, who in their right mind with Jim Cramer in an Eagles jersey would put money on the Eagles? I don't know. What was the point spread? Anybody know what the point spread was? I should look up the... Remember that girl we found on YouTube whose quote-unquote team had an expert sports picker where you joined her, I think it was $199 a month for access to her Discord group. I don't know Frontline. Let's see. What is Frontline? FRO. Who was favored, the Eagles or the Chiefs? Oh, wow. See, I didn't bet. I used to bet NFL, and then I started trading stocks a little bit more on a daily basis when I left my job. Then I was like, why am I losing money on the NFL? Because if you don't know, if you put money into these betting things, so I use gtbets.eu. I think that's the one that I use. Oh, wow. That's a great spread, Sean. That's a great spread. But I was betting on gtbets.eu. I think it's in the EU. They will double whatever you deposit. So I used to, at the beginning of the season, I would deposit $500 because that was their limit to double. And they'd give me $1,000. Or I'm sorry, they'd give me 500. So I was betting with their 500 and my 500. By the end of the season, almost every season, I was down to zero. Almost every season, I was down to zero. And it's because I would do these crazy parlays for like, where $10 would win you like 10,000. And I hit 2 of them. but they were super small. I think I said it all last week, man. I think I said bet the Chiefs. I think we can go back and look at the live replays, but I'm pretty sure I said bet the Chiefs all last week. Doesn't mean that I did. Honest to God, I didn't bet. But I am a new and two reasons. Jim Cramer is the curse. Let's be honest. He went to the Phillies World Series on the games where they lost. So they lost the World Series. Then he goes to the Super Bowl, and the Eagles lose the Super Bowl. So, and I think on most of the games that he went to were either close or the one game that the Eagles lost during the season. So, what do we let me see. What's a pre-market mover that's really moving? VLON is the one that's really moving. This is a pharmaceutical company. They closed at 46. They're up at 90. And you've got momentum. I'm going to go to a 5-minute chart. Wow. Now, mind you, here's the thing. Let's see, VLON. I'm going to look up their market float, how many shares they have outstanding. These guys have 6.96 million shares outstanding. So far in pre-market, you've traded 24 million shares. So, and there's no news on this one. Short interest, 5.15 million. I don't see any news on that one for some reason, VLON. But it's a healthcare pharmaceutical company, so it's doubled. Oh, yeah, I got to look up. I'll look up that one for you. Brian. Frontline, FRO. I'll move it back here. Safari view. Frontline, oil and gas midstream. They're located in Bermuda. God, I love Bermuda. PE's expensive at 13. Year to date, it's up 33%. 1 year, it's up 124%. The Jefferies thinks it's a $16. It's trading at 16, so it's hit its kind of targets. The average price target is $19. So it's slightly below that. I don't see any insider transactions. I just don't see anything about it, Brian, to be honest. That chart looks nice, though. Let's look at the chart here. I mean, you got an ascending triangle. Your 50-day obviously used your 200-day to bounce off. I mean, it's just... This is a weekly look at it. And this goes all the way back to 2017. You're above your all-time highs here. But I don't know what's projecting it. Other than seaborne transportation of crude oil. That's it. So if you haven't heard, essentially I read an article over the weekend that seaborne transportation of oil in particular, these guys are able to name their price. Essentially, say, for instance, you want to move oil from the U.S. over to Europe. These are probably some of the guys that you would do it with, and they could charge $5 million, and the producers will pay it. It's back to kind of back here in May when the last year when the shippers were really moving, and you see this one went. I mean, this is a weekly candle, and this was a 30% move in that candle. 30%. Your low was $8.64. Your high was $11.57. That's just 1 week in May of last year. Last week on Frontier, you moved from $14.58 to $16.71. Yeah. The only thing I would say is you're at a high. I mean, look at some of the other shippers. SBLK. You know what is the other one? RIG is Transocean. RIG is not making money, but you can see that move in RIG. 1 year, it's up 105%. They're just printing money. I mean, $7.50 price target, they're already at $7.35. And if we look at RIG, it's probably a similar. RIG is not making money. Frontier is. I think it's a great call. RIG, you're in at 483, but you have this button hook here on RIG. But God, imagine if you bought back here at 3, you've doubled your money back in November. Yeah, the shipping companies are good, specifically with oil. I think RIG's a good one. Frontier, I didn't know about it, but I'll add it to a list. Let's see, RIG and FRO. I think I had that in my notes before, like from last year. I think you're talking to Brian. It's similar to what I was doing last year, which was the shippers, SBLK, EGLE. There's a couple others that I traded, but they're all moving well. They're all moving real well. But look at this one, VLON. Remember how I said at 90 cents it was moving well? It's at $1.07. You got your volume pop. And look at this. Active Trader Pro is actually reacting well. I'm going to go to Anchor, and I'm going to upload this one. Boyle is down, by the way, if you didn't know. Big. I try and tell people, don't try and time things. Browse. Podcast. 213. Finished uploading. I will insert I like Peacock. Peacoat. Anybody notice how bad the advertisement? I mean, there was nothing advertisement. I think Will Ferrell on the GM ad, that was the only one that I really kind of thought was decent. But I didn't watch. It wasn't like my team was in it yesterday. It was a great game. I think it went right along with God, look at this one. If you got into VLON when I brought it up, even in pre-market, man, when I at the beginning of the podcast, what? I think I got on about 8:10. I said VLON was at 65. Within an hour, you've doubled your money. I'm going to make a list of those shippers. I'm just looking. Boil. I mean, you're going to dip below $6. You got some confirmation here. But I wouldn't even day trade this one. I mean, I would for like a 1% scalp, but KOLD, man, if you got a job, if you got something to do during the day, just fucking buy KOLD. If you're so apt to buy. Of course it is. Of course it is. Oh, I didn't even talk about, I'll talk about it here, but I'll bring it up. Google and Microsoft. On search. I'll bring it up tomorrow, but I'll bring it up here. Let me finish this, and then I'll kind of go into it. Yes, Zim is one that I traded last year as well. VLON's going to open up at $2 after the halt. No, oil's not going away. Biden's fucking high as hell. I mean, I think that was clear. Ooh, Fidelity shares, FIS, on weak guidance, announces spin-offs of WorldPay. FIS, I like that one. FIS, weak guidance, any reaction is an overreaction. I like that. 213.23. Hold on 1 second. I'm just going to go. I'm not going to promote it. Okay, it opened back up. 110. Is it halted again? I think it halted again. By the way, anybody notice on Spotify that CAMT David, no, stop. Yoakum CMS CAMT. We're going to put in DRN, CVNA, earnings, and then we're going to do this. Focus on DVN, Boeing, DRN. Wait, is it? No, it's DVN. DRN. Why am I doing that? DRNBA. CAMT. CVNA. PLTR, Coke, Devon, AB&B, Upstart, RBLX, Roku, TARK, SARK, and then yeah, we'll just put those in. Okay, and we'll publish. We'll put this in Twitter, and let's see. Oil's not going away. The problem that you have though with Brian, oil, is it is heavily manipulated by governments. And when you're heavily manipulated by governments, you've got, there's a problem there. Let's see. I should be able to. Tweet. I hate when it does that. I hate when it does that. Twitter. Bum, 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 bum. Ugh. Man, Anchor's got to get SPY, TQ, QQQ, SQQQ, Tesla, I'll say Boyle, VLON, SOXL, Bed Bath & Beyond. Tops is Tops a shipping company? UNG. CS. Neo. I'm just going to put these in. Tweet. Okay. Bum, 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 bum. I did my 2. Let's see. Boom, 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 boom. I would not be surprised if Elon starts a cryptocurrency. I would not be surprised at all if he starts a cryptocurrency. Not one bit. Okay, so let me talk about, I will talk about it tomorrow on the podcast more, so you guys that are here. Let me talk about, I listened to the All In podcast, and if you want to listen to All In, it's basically this, All In podcast with Jason, You can subscribe. Jason Chamath, Sachs, and Freeberg. It is an amazing, amazing podcast. Here it is on YouTube. But I listened to their latest episode, which I need to subscribe to.
I have this with my oldest son where I don't know if it's all kids, but
I'm going to take it off there. But essentially, the All In podcast, this particular episode, the AR Search Wars, Chamath does a fantastic job about talking about Microsoft and Google and how Google is just not going to be able to keep up with AI. With that, they are so Google's business is ads. Artificial intelligence, even they don't know how to monetize it yet because it's kind of counterintuitive. How are you going to have artificial intelligence insert ads when it's supposed to be intelligent? It's not supposed to serve up ads to you. So that's the interesting part is how do you do that? And Google's got to basically cannibalize their business. So do you want to invest in Microsoft or do you want to invest in Google? In my mind, again, I think Google at $94, I think anything under 100, you're under this 200-day right here. It just got you out with a 7% gain. I think as we get closer down to the 92 portion, I am going to start adding to my Google. Again, right now, it doesn't have confirmation that MACD is moving down. The RSI is at 40. I can't imagine why I would buy in at this point. I bought in at, I think 96 or 98 is where I got it. But I don't care. It's a long-term buy. I'm buying this for long-term. I bought against my algorithm. I should have waited for the algorithm because I do think that you'll get down below this. But the whole look at the volume spike. At some point, this starts to turn back up and you get back above the 200-day. If you look at this from a weekly perspective, you're bouncing off that 200-day right here at about 95. The only other time it broke that 200-day was COVID. So I do think that you have an opportunity here in Google. When we look at Microsoft, same kind of thing. You're in fact, you're even moving upwards at a greater pace than Google is. But look, you touched that 200-day. You haven't touched that 200-day ever with Microsoft. Now, Microsoft wasn't, well, this is a weekly. Let's go to a monthly for Microsoft because they go back so far. Microsoft here at the dot bomb was trading at about 48. Took you a whole decade to get back, if not 14 years to get back to that realm. But ever since then, you've been off and going, and you touched the 200-day. I'm sorry, the 50-day, but you're so far away from that 200-day. So far away from that 200-day. So I do think that both have a place in search. Microsoft, Nadella has said he doesn't care if they make money in AI. He doesn't mind losing money. He just wants to siphon off some of Google's intelligence. Now, I thought about it this weekend. I remember when Facebook popped up, Google started, I think it was Google Circles. They started their own social media company. Complete failure, complete flop. It went away. And I just posted on YouTube as well a short on my channel, your channel, and then you can go and look at the shorts. And this is My First Millions right here. And he talks about how Google makes so much money. They don't particularly care. They go into so many different businesses. $100 million a year in revenue means nothing to them. They will just drop that product. They don't want to focus on it. So it's interesting. Snowflake is up almost 2%. Tesla's down at 190. Tesla's getting a button hook. Down 3%. It couldn't hold that $200 price. Yes and no, Sarav. So Nadella has been a genius as far as what I'm concerned with Microsoft. Look at what Ballmer did with Microsoft. He did nothing. He got them into mobile phones. He didn't want to get into the cloud. He didn't think that was a business that they wanted to get into. He didn't want them in servers. He wanted them in hardware. He wanted to get the hardware off the ground. I mean, he was, anti-Bill Gates. He wanted more hardware than he wanted software. That's my take on Ballmer. I think when Ballmer left and Sachet came in and he said, you know what? We're going to do cloud. He bought LinkedIn. And if you don't know why he bought LinkedIn, Ballmer was horrible. But the reason Sachet bought LinkedIn is he wanted to know where the talent was working. It was a genius move. He knows exactly when people are looking for a job, what their skills are, and they've turned that into just an amazing talent recruitment tool for themselves more than anybody. And they'll never admit that. But God, imagine what you have behind the scenes in LinkedIn. Then he goes and I think he buys GitHub, which is the developer stuff. I mean, genius. Then he buys an AI company. So what he's doing is he's basically going to have access behind the scenes with that $10 billion that he just gave to ChatGPT. Make no mistake, ChatGPT has been a genius move. $10 billion. Google lost $100 billion with their bad AI. They could have just offered $100 billion to ChatGPT and saved themselves on their their market cap. So that's why I think Google's a good buy here, because I think it's an overreaction of the market. B, I think Microsoft is just a phenomenal buy with the strategy that Nadella has turned on. So in my mind, I think those two companies are just brilliant with their go forward plan. And I think, Amazon, here's my take on the big ones, big tech companies that I have. Google, I think, will be fine. I think they're just cheap. I mean, the reality is they still have Android. They still have so many businesses that they do. I freaking hate Android. I can't stand Android. I tried an Android phone this weekend with my friend, and I was like, oh my God, it just seemed confusing to me. And mind you, I'm a boomer. I am nobody from a technical standpoint. I know how to do stuff, but I just like that it works. And the Google, when I installed a new app that I was trying on my iPhone, on one of the Google phones, it wasn't available because they had an older version of Android. B, when we installed it on the newer version of Android, and I won't say what the app is because I like the app, but I wasn't crazy about it. It's not for charge or anything, but it's nothing that I would say, hey, somebody get into. So I won't tell what the app is. Sherry, yuck, But the iPhone version of the app was great, beautiful, worked well, didn't crash, did exactly what it was supposed to do. The Android version of the app crashed on install. Had to uninstall it, reinstalled it. It worked okay, but it still seemed very buggy. And being from a product world in my previous life, I can tell you, developing an iPhone app is straightforward. It's one version, operating system. There's some tweaks and little stuff for the home button people versus the people with just the screen. There's some differences in some user experiences there. But overall, simple, straightforward. One version you can ship of the app. With Android, you have to ship like 30 versions of the app. And you have to customize the experience for every one of those users. And from a development standpoint, it makes way more sense to just develop for the Apple world. And so with Apple having almost 50% of the entire universe, I think it's around 40% worldwide, but here in America, it's even higher, the Apple. Let me see. US, Apple versus Android. Market share, let's see. Android accounted for 45%, while iOS accounts for 55%. Boom. Who am I developing apps for? And who owns that market? So that's my take on Google. That's my take on Apple. I gave you my take on Microsoft. The other big one that I'm heavy into is Amazon. Amazon is under $100. Amazon deserves to be well over $100. Amazon does not have a demand problem. Amazon has a spending problem. Amazon hired over the pandemic about 1 million additional workers. A large number of those were in the executive ranks in the corporate world, where now you have people sitting around doing nothing. And so Andy Jassy is going to get these costs under control. That's where you're going to see this stock explode. It's not going to be new services, new things. You will see an AI press release from Amazon at some point in time in the very near future. And I think Amazon pops up to the 130s again. It's my take on it. And that's my belief on it. Again, this thing about investing in stocks, it doesn't take the services that you use, and basically if you use them and you like them, more people are going to use them and like them. And so from an Apple standpoint, that's why I'm staying long in Apple. Doesn't mean that I'm right, but I'm staying long in Apple. Means that I'm staying long in Amazon. Microsoft, I don't necessarily use a lot of Microsoft services, but I do see they're playing number 2 in the cloud space to Amazon with their Azure stuff. So I do think that they take some market share from Amazon there. And I do think that Microsoft, Satya Nadella, I mean, you bet on leaders. And I think that guy's got a really good head on his shoulders as far as strategy. So as long as he's the CEO, I think there's a good go forward plan there. I do question the purchase of Activision Blizzard. I don't think that you should have put a $3 billion poison pill in there, but he did. I question that one. Let's just go down our core stock portfolio. Apple. It's had a run. As far as the algorithm goes, it still got you in. You have a gap here at 146 to 147. I think you cover that. I think you get down to those levels. Amazon, I think anything over 100. From my personal portfolio, if I had to hold things for 10 years or more, and that's a hard one, but I would tell you, so Apple is one, 10 years. In my mind, I think Apple is one. And remember, you're going back to 2023? You're going back to 2013. So let's just, for the next 10 years, do I think that Apple could keep up with the last 10 years? That's a tough one. I mean, you look at 2013, you traded, we'll just take June, at about $16 per share. Do I think they're going to 10 times over the next 10 years? That's a tough one. I mean, that's a tough one to keep up. But I do think that they have the opportunity. If there's one company that I think does, it's Apple. You take a company like General Electric. This was one of the Nifty 50 in the 70s. and you go back to let's go back to a monthly on this one. Look at these 10 years from 2010 to, you could even go back here. Let's see. We're going to go way back here. I mean, look at this nifty 50 move. Take these 10 years from 1990, where you were trading at about 33, and here to 2000, you're trading at 444. Would you put your money in GE today? It's got a problem. So 10 years is a little bit, just to kind of put it in perspective there, 10 years is a little bit difficult. But if you were forcing me to put money in and never spend it for the next 10 years, I'd say Apple. I would say Amazon. I would say Microsoft. Because I do think that Microsoft is just that well. Google is one that, while I think you could, might be problematic. Google, I think of kind of the way, the 15th, man. The 15th. Remember, I said the 15th. They're all talking about a crash on the 15th, so later this week. I mean, shit, that's a big earnings day, too. You're looking at Shopify, you're looking at Roblox, you're looking at a lot. But I would say Amazon, let me finish this thought. Amazon, Apple, Microsoft are three. I would say Google, but that's a maybe. And I think Google and Meta are kind of in the same space because I think Google could make some big missteps and their dominance could be taken down. I think the same thing about Meta. So I think I'd use those two interchangeably. And the other one that I think you could buy and hold, and I don't currently own it because I do buy and sell it, is Tesla. And if you want and kind of alter ego one, I'd say Uber. And I don't own an Uber as well. But if you sign up for TrendSpider, I do have a core portfolio that I put up there. Oh, yeah. Yeah, I think here's the way I look at Tesla. Tesla, the way I look at it, we'll look at a weekly on Tesla. The last time you were under the 200-day was around 2019. And your 50-day is kind of moving negative. It's the first time that it's really moved negative. But your 9 and your 21 seem to be bouncing up. So I think you're seeing a little pop here. Now, it is expensive, but they only delivered, 1 million cars last year? Their assumption is that they can continue to grow by 50% per year. On an average, they have been beating that. They've kind of pulled that back a little for this year. They don't believe that they're going to deliver 2 million cars. But next year, I think with the Cybertruck, I don't like the look of the Cybertruck, but what do you have? I think it's almost close to 500,000 pre-orders for the Cybertruck. You've got demand for at least, I'd say, 5 years on the Cybertruck. I think the Model Y just got the stamping. I think they're making significant battery improvements. I think they will continue to deploy their charging network. So I do think that Tesla, I agree with Elon. I think Tesla is huge. Now, here's the danger with Tesla. China. They need to continue to grow in China in order to be able to continue the growth of their business. If for some reason Elon does some shit with Twitter that pisses off the Chinese government because he's big on free speech. He's big on promoting that. This is a guy who won't speak out against the Chinese. He won't, he loves his free speech, but don't make me say anything bad about the Chinese. Even though the Chinese have a horrible record on human rights, even though the Chinese Communist Party has just a horrible, horrible record of what they do to their citizens. He won't speak out against that. It's a great thing when you can live in this country and you can buy a social media platform and you can say, hey, we should have 100% free speech. Oh, hey, hold on 1 second. There's my neighbor. Sorry about that. You can hear me now. Let me make sure you can hear me. I'm going to turn up my volume. I think I'm live on there. I just got to wait for it to catch up. Sorry about that. You can hear me now. Okay, there we go. Okay, Tesla 10-year holding. Winnie the Pooh. Yeah, so Rob, I mean, you get it. NBA and Disney won't speak out. Yeah, I mean, it's all... even Apple. Apple won't speak out. Nobody does business out there will speak out. But let me do an indices check and then I'm done. And I'll be back on tomorrow, so you guys know. And if you're new here, hit that thumbs up button while you're here, because I forgot to do it. And if you're interested in joining our private Facebook group, ooh, I'm up today. What are the indices doing? Let me see. Markets are up 0.63. The NASDAQ is up. I am up 0.54, so I am underperforming. Okay. If you have any questions, hit me up. Join the private Facebook group. All the links are down below. You guys know the drill. So I'll talk to you later. I'm going on my 10-mile walk. See you guys.